Wedgewood prioritizes profitability as a standard for ownership in the portfolio. It seems like an obvious characteristic, yet many large cap growth managers seem to disagree. Why do you think that is?
Honestly, we don't even view this as a philosophical difference at Wedgewood. We think that companies need to be able to finance themselves unless you have, with their cash flows, unless you have free money available to them some other way. So other managers can get away with investing in companies that aren't able to sustainably finance themselves when there are free equity markets where they can just go to the equity markets, raise capital all day long at higher prices. And they also don't need to be able to finance themselves when there's free debt financing available. And, we do find when you hit periods where it seems that there's going to be free money and the stock market's going to go up forever and interest rates are going to be low forever, that people can invest in those companies that don't finance themselves, and you don't really see any problems. And that can leave people like us looking like dinosaurs, we think.
This idea of industry-leading profitability, high levels of profitability, whether being some combination of return on equity, return on capital, return on investment capital, cash flow return on invested capital, that's our process North Star. And key to that, if a company has demonstrated or generated significant amounts of such high levels of profitability, particularly relative to their peer group, that to us is prima facie evidence of competitive advantage, which underscores it's the foundational element for us to be long-term investors. What's really interesting, perhaps just a related industry, large cap growth industry observation, many large cap growth managers, their process is significantly based on momentum, a combination of sales momentum, earnings momentum, even stock price momentum. Again, this gets back to this idea that a lot of money out there is managed despite their professed beliefs on long-term investing. When you look at the portfolio turnover of many of our peers, it tells a different story. And I think it's telling a story of momentum, which again gets back to this idea. Too many in this business, in our view investing as a sprint, quarter to quarter, year to year, instead of a marathon, which we measure ourselves and our companies we invest in over a multi-year time frame.